So a couple of videos ago, I talked about the new Bitcoin ETP that had landed on Trading 212. And at first glance, it was quite interesting. A couple of days ago, Trading 212 released an article saying that this new ETP will be configured to close-only mode from the 6th of January 2021. This isn't actually something out of the blue. It's something the FCA have been delegating about for the last 2 years now, but nothing was made official. It has come about due to a policy put into place by the Financial Conduct Authority, or FCA, which is the UK's financial regulatory body, stating that retail customers can't reliably assess the value and risk of certain crypto assets due to things like volatility, subpar understanding, the relationship of crime with cryptos, etc. So what does this mean for people wanting to invest into this ETF or ETP and people who are already invested? If you are looking to invest into this ETP, you have until the 6th of January to do so. After that date, you can no longer buy any more of this ETP. After the 6th of Jan, as Trading 212 have already stated, you will only be able to sell the positions that you own and will no longer be able to buy any more. So for example, you could buy £1,000 worth of the ETP now, and after the 6th, you won't be able to buy any more, but you will be able to sell your positions whenever you wish. So if you were planning on dollar cost averaging past that date, you may need to rethink your strategy. And also, if you don't have an open position by that date, you won't be able to see this ETP on your app. This kind of hurts because having such a thing in an ISA obviously means that the profits you gain are tax-free, which I think is the main reason people were attracted to it. Now, just coming back to the beginning where I said it was interesting at first glance, and that was because after delving into it a bit more, I obviously saw that this new policy could potentially cause some issues, but also that the TER or total expense ratio sits at 2%, which is high when you compare it to something like a mutual fund, which sits at around 0.5 to 0.75%. Given the significant increase it had this year, however, I don't think those fees will be too much of a problem. Obviously, as time goes on, the more and more those fees will eat into those gains. Another problem, well, quote unquote problem, is that it's traded as a stock or ETF and not crypto, meaning that you won't be able to buy or sell any before or after market hours. And given the volatility of cryptos, this instrument may not be the wisest investment if you're emotional and are looking to get out quickly. Because as Bitcoin continues to trade and fluctuate in price after normal market hours, you will need to wait until the next day to sell or buy your positions. And by that point, it would have moved either in your favor or against you. Last but by no means least, I think it may be better to hold real Bitcoin directly instead of something that tracks, because that way you're actually owning the asset itself instead of having a firm or someone else hold it for you. And because of those reasons, I myself actually decided to buy Bitcoin directly. Well, I've only bought an incredibly small amount just to test the waters. I'll purchase some more in due course. I think a pullback is needed, at least to the 20-day moving average for me, because it is clearly overextended at this point, but that won't stop me from investing or dollar cost averaging into this. Of course, if you're holding long term, it doesn't really matter when you invest in, but I just like to manage my short term margins a bit. The exchange I'm using is called Kraken. I know there are some other good exchanges out there like Coinbase, eToro, and possibly Binance, even though they've been hacked before. But I sided with Kraken because it matched Bitcoin's price the best over the length of period I researched for, and it also seemed to have better reviews. I did hear about the flash crashes they incurred, but weird to say, I'm not overly worried about that. And at the end of the day, I think it just all comes down to personal preference, and I'm getting used to Kraken, so I think I'll stick with it for the time being. I also purchased a hardware wallet from Trezor so that I can store my Bitcoins there. This isn't something that's required, you could just leave your crypto on the exchange, but in case the exchange is intruded by hackers, it would comfort me to know that they can't access my cryptos because they are stored in an offline unreachable device. So yeah, it sucks that the new ETP will no longer be investable anymore after the 6th. There are other indirectly related Bitcoin stocks to choose from if you are desperate, and I believe Trading 212 said that they were looking at providing an alternative to allow people to invest in Bitcoin through a different method. I couldn't find the notification on my phone. I don't know if it expires after some time, but if I see something while editing, I'll just pop it on the screen right now. So this week I spent a couple of hours just catching up on the market, and whatnot, since I'm just trying to relax over this holiday period. And the most prominent thing I've been seeing is people talking about penny stocks. I must have missed out on an invitation to a party or something, but this seems to be high on the agenda list right now, along with SPACs, which have really been at the top for the most part of the second half of 2020. So I decided to have a look at the penny stock subreddit, and everyone is going crazy over there. I then came on YouTube and see multiple videos being uploaded every half an hour about this stock called BioNano, ticker symbol BNGO. It's just been seeing some mad growth recently. I did see that some of the main catalysts driving this stock is that Vanguard purchased roughly 5.5 million shares of this company at the back of September. There were also very light rumors that ARK Invest might be looking to buy in, which was born out of a tweet by one of ARK's genomics analysts, and also that Cathie Wood is a big believer in the performance of genomic stocks in the near future.
If I look backward, as you well know, Tesla accounts for almost a fifth of the return that you have generated in that 5-year time span. Which of your current holdings, Cathie, do you think will supply the biggest lift in the next 5 years?
Tesla's still in the running, but I would have to say the biggest upside surprises are going to come from the genomic space. And that's because the convergence of DNA sequencing, artificial intelligence, and gene therapies, importantly CRISPR gene editing, are going to cure disease. That convergence is going to cure disease.
I barely know anything about this company apart from what I've watched from a few videos I've seen here and there, plus some of the stuff I read on that subreddit. It seems like the people in that subreddit actually make some good calls before it hits the YouTube shores, so I'll definitely be keeping an eye out over there. There's obviously still some stuff that I need to look into, and of course, because these are penny stocks, I'll need some sense of caution. I've created a watch list of some stocks I'll try and check out when I can, some of which have already seen significant movements to the upside, so I've probably missed the boat on that. I have had a look at some already, and I can already eliminate how do you pronounce it? Zomedica, ticker symbol ZOM, and it seems to be in relation to veterinary diagnostics, and I just don't have any interest in that field of work. So if it drops like 5%, I'll probably get scared and sell, because I didn't have that ignition in me to research properly into that company, because I'm just not that interested. But if it goes up 1,000% in a day, then well, congratulations to whoever owns it. But for me, I just don't feel like I would care. But yeah, if I do decide to invest in any of these penny stocks, it will only be a small part of my portfolio, and who knows, we could see another similar story to that of Neo. Talking about my portfolio, we're currently sitting at just over 5k, brought about by a 21% increase from my initial investment. A lot of my account value is held in cash at the moment, and this is from the selling I've done over the last couple of weeks to reduce the diversification of my portfolio. I'm waiting for some of my stocks to cool down a bit so I can reinvest that money back into them. And this week I did just that, buying into the likes of Opendoor, Virgin Galactic, Spotify, Trade Desk, while also opening a new position in Cloudflare. This has replaced the World Cloud ETF that I previously had. As I mentioned in my previous video, cloud is and will be a big part of our futures. We make use of it where I work, so I understand the potential and use. It was really between CrowdStrike and Cloudflare for me, and I found that Cloudflare offers more to the end user and provides better cybersecurity features, and so I hopped on board with them as I see more scaling up prospects for them. In other areas of my portfolio, there hasn't been a lot of action. I've seen the largest gain this week coming from Celsius Holdings after an announcement came that it's set to join the S&P Small Cap 600. This will mean that funds and firms that track the index will need to adjust their positions in order to include Celsius into their ETF or whatever they're tracking the index with. It's a similar thing that happened to Tesla when it joined the S&P 500 in early December. And similar to that, people will get excited at the thought that there will be a greater number of buys into Celsius, but after a couple of weeks, the fundamentals will kick in again and the hype will die down. And I'm really hoping it does soon because I need to buy more. On the other side of the spectrum, we have Opendoor. It has dropped quite a bit this week on no significant news. As mentioned previously, it is one of my riskiest stocks that has things to prove. If it doesn't meet expectations or is far off it, then it will be something I will need to review again. Looking at the technicals though, I'm expecting it to make a nice run up within the next 2 weeks or so from here as it bounces off the 50-day moving average and hopefully comes out of oversold territory. In terms of my plan next week, I don't really have anything set up. Like, I'm still in holiday mode. I just want it to be a holiday all year round. I mean, but that's the whole point of this, isn't it? Just get to financial freedom, generate passive income so you never have to work a day in your life again unless you want to. Once you found a passion to do something, I hate that word passion by the way, but once you found a passion to do something, you probably want to continue it even into retirement. But yeah, we'll just go through the week as we go through it normally. If anything comes to mind, I'll act on that. No thinking, just vibes. No, I'm joking. But yeah, let me stop talking now and let me end the video there. Oh, Happy New Year. 2021 and that. Hindsight is finally 2020. But yeah, I'm hoping this year the market brings us even more fruitful endeavors than it did last year, as the economy hopefully reopens when the vaccinations get rolled out, and fingers crossed they don't turn us all into mutants. But yeah, keep safe, keep wearing your mask, keep social distancing. I know some of you have been going to parties. I'm not going to say any more on that, but I'll end the video there and I'll catch you in the next one in a bit.